I think the Fed is looking at the global economy and seeing it slowing, and I think that's probably the biggest factor relative to...
Did they cause the slowing? Were they part of the reason that it was slowing? But in October, when he said that, did sentiment change based on what Powell said so that it actually orchestrated, it was almost self-fulfilling that the economy slowed?
Well, the economy was running at an extremely strong pace, say, mid-year of last year. So some slowing was inevitable. But I think the domestic economy is still in very healthy shape. I mean, if you remember back to the beginning of the month, you know, when we got the December employment report, it showed job growth of 312,000. If you look at industrial production, you're very strong. You ended the year. So I think the U.S. economy is still in pretty healthy shape.
So what's he pointing to that slowed down? Global?
Probably numerous factors. Slower global growth, uncertainty with regard to the government shutdown. You've seen a tightening in financial conditions. You've seen sentiment measures, as you mentioned, have come off. Earlier this week, we saw consumer sentiment measures have come off. So I think right now, you know, a pause and patience to see the path forward is the right approach.
So it's only January, barely. What does a pause mean? Does it mean they go in June?
Perhaps. I think they're going to want to see the resolution of these downside risks before they go again. So right now, they're removing all this forward guidance that has been put into place over the past several years. And as we get closer to that neutral rate, which right now you're at the bottom of the Fed's range of neutral of 2.5% to 3.5% in rates, then as you get closer to that, you want to get away from giving the guidance and you want to see how things evolve. So right now, I think the Fed is on a path that yesterday's statement was even more dovish, saying that they're not even characterizing it as for some further increases. They're saying adjustments. So it's a two-way risk now that they could either cut rates or raise rates, and they remove the balance of risk statement entirely from the statement.
So, Ellen, does that mean for the stock market, for the S&P, that the Fed is now out of the way until June? Or, I mean, the market discounts into the future. When does the market start worrying about a June hike? Or does it? Is it just going to focus on results? And these results these are last year's results. They're not, right? They're you know, we need to know what this year is going to look like.
So it looks as though the S&P earnings this year are going to come in at mid-single digits, and that's a big deceleration from the 23%
it's not zero, though.
Last year, but it's still positive, and that's the key. A lot of people are talking about whether or not there's going to be a recession and the fact that the yield curve has flattened, et cetera. But it does look as though the S&P is still going to have positive earnings this year, even though it's decelerating. And I think the key is going to be whether or not the market and the Fed are able to correctly discern the difference between a slowdown to a more normal corporate profit growth rate and the beginnings of a recession, because the first signs might look the same in both cases. I think if the Fed does raise in June, the market might have a little bit of a tantrum, but at the end of the day, we still are at the low end of the normal rate, and we still have pretty accommodative policy compared to the history pre-financial crisis. And so there is scope to raise rates a little farther.
I mean, if models only worked, wouldn't it be great? I mean, we could say, okay, the Fed is on pause, so the multiple we have right here shouldn't really change. So if we get 5% earnings growth, we should be able to count on 5% up in the S&P, but it doesn't work that way.
Animal spirits are really powerful and difficult to predict. So I don't think anyone predicted that the market was going to be down 4.5% last year. This year we'll have to see, but it does look as though corporate profits are pretty good. The S&P companies that have reported thus far have had sales growth of 4 or 5%, earnings growth of 11%. Still very early. I think those numbers will end up coming in higher because it's only a small proportion that have reported. But it doesn't look so bad. What we are hearing, though, from companies reporting earnings is that international has really slowed. You look at 3M earnings, you look at Stanley earnings, Stanley Black & Decker, you look at Caterpillar's earnings, and they all talk about slowing in China, in Germany, in Europe, and to some extent in the U.S. You have the housing slowing, you have the autos slowing. So there are some negatives. It's not a Goldilocks
Does that
world.
put you in a recession? Is that the Ray Dalio put you in a recession in 2020 idea?
At the earliest.
At the earliest?
At the earliest.
Do you think that everyone's coming out with this 2020 business just because that's sort of, they look at the calendar and say, well,
it's not 2019.
It's not this year.
Right.
I think it's very difficult to predict out that far.
Very
It's like
difficult
the
to
weather.
predict the future. It's much harder than other predictions, isn't it?
Thank you, Yogi Berra.
You're welcome. You're welcome. So I don't know what to think. Would it surprise you if multiples expanded?
It wouldn't. It wouldn't surprise me if multiples expanded. Where we are right now is at or below historical averages for multiples. And as Kevin was saying, the economy looks pretty strong here with respect to unemployment,
Yeah.
GDP, purchasing managers index, many other indicators. So you could have multiple expansion from here. But predicting that on a day-to-day, week-to-week basis, I think is very difficult.
So before we go, Kevin, this is an easy question for you. We should be more worried about inflation or deflation globally?
Well, right now, I think inflation is pretty much where the Fed wants it to be. So I think that you'd have to see really upside surprise for them to actually hike rates this year after perhaps some resolution of these other, external factors of global growth reaccelerating perhaps. But I think, the Fed has been very cautious, and rightfully so, because inflation really hasn't picked up.
So what's our true concern? Inflation or deflation?
Not necessarily deflation, but low inflation, I would say, is probably
That
more
might be. That's not as.
downside.
That's like could be good.
Yeah, I think it's a pretty solid
Disinflation.
growth, and tame inflation is a pretty good recipe.
That's a real question. Why? I don't know why. I don't know why. Especially with wage pressure and 300,000 jobs and all that stuff, I don't know why it's so hard to get some traction. I think it's the internet, Amazon.